All right. A very good evening and assalamu alaikum to everyone out there. Uh, Thank you very much for joining this very important event in the online space on behalf of ACCA and ICMA Pakistan. Uh, Let me welcome all of you who have taken time out and have joined us live on this event. As you may all know, ACCA and ICMA Pakistan uh, have signed a strategic partnership agreement back in March early this year. Uh, Prior to this, the both accounting bodies have enjoyed a great relationship for almost 5 years now, particularly starting in 2015, and now we have embarked ourselves upon a number of initiatives, and those initiatives have really provided and contributed to the member bodies across the globe of ACCA and ICMA Pakistan, but particularly to members who are from Pakistan. Similarly, we jot down a number of initiatives in our strategic partnership agreement as well earlier this year, and we continue with the same rigor, with the same energy, and with the same passion onto a path where we would like to create opportunities for our members, not only to strengthen their resumes, their profiles, but also to make sure that how we can create different other products for the members that would definitely benefit them in their professional careers. Uh, One of the initiatives was definitely to create a pathway between ACCA and ICMA, and I'm very pleased to share that a lot of work has been done on that project. The design and the rollout is complete, and exams have already started happening. Applicants have started to take part in those exams, and that's not far from. We are not far from that point when you know members on each side will be proudly writing letters in addition to the letters they write from their originating bodies, ICMA and ACC alike. So, that is one initiative. And then, this particular one where we shared last time that each month we will be holding an exclusive event. Uh, and the areas we would be picking up for these online events will be on the public practice domain. So we really want to encourage members to get to this space because, as we all know, in Pakistan, a lot is happening, and this is an interesting time, to get into this space. And we would really make sure that our members really have the skill set, capacity, and above all, continuous professional development, just to make sure that they are on uh, at par with with the pace across the globe. Without any further ado, let me request one thing very quickly. If you can share with me by typing yes into the question panel, that you guys can hear me loud and clear and you can see the screen as well. Although I had to do this early, but apologies for a late housekeeping. Thank you, Shoaib Saab. If I could request everyone else as well to type yes if they can listen to me and see the screen as well. All right, so all yes so far. The voice is clear and good. Thank you very much, all of you who have responded. I hope everybody else can also see the screen and listen to my voice as well. Now, without any further ado, I would like to now invite our guest speaker for the today's topic. And the today's topic is very important, as I said earlier on. It's on the tax administration and how technology can really help uh, us in ensuring a good collection, and also making sure that we continue to leverage the technological tools. We are very glad that the report, this topic is actually from a research report from ACC's Professional Insight Library. And the author of this report, Jason Piper, who is head of tax and business law at ACCA, has kindly agreed to share his valued time with us and all of you. And he now definitely would be reflecting on this topic in a greater detail. In the interest of time, I would like to request Jason to please continue with the delivery on this very important topic. So over to you, Jason. Thank you.
Thank you, Hassan. And as you say, I lead ACCA's policy work on tax and business law, and I'm very pleased to be with you today. Thank you for giving the opportunity to speak to this audience. One thing that I'm especially interested in is the interaction between tax and business and society, and that's something that's really highlighted by today's topic, which is, of course, technology tools and the future of tax administration. Thank you. Yep, and on to number 4 there. But what is the goal of tax administration? What is it we're actually aiming for? Well, I think on the next slide, we've got a quote which is at its core what tax administration is really all about. Making the process of tax compliance as painless as possible. Now, of course, there's a financial impact to paying tax, and whilst probably not many people enjoy it, most people recognize the value of paying at least some tax. But I don't think anybody welcomes the deadweight resource drain of the compliance process itself. So let's think a little bit more about what that means. So coming on to the next slide, just thinking about that in a little bit more detail. What we have in the background to this slide is one of the earliest examples of technology and tax being involved with each other. Writing itself, it's attributed to the earliest accountants as they tried to keep track of what was going into and coming out of communal granaries and storehouses. Maintaining a reference copy of the information about who owned what and how much of it they still owed to the king, local lord, or temple priests was essential. I mean, one of the best known archaeological artifacts in the world, the Rosetta Stone, which was instrumental in unlocking the written language of ancient Egypt as a tax decree. Now, the link between basic maths and tax is obvious, but the Egyptians gave us more technology in tax, trigonometry, working out the area of irregular shaped fields, which was the basis of part of their tax system, was another technological development, which has been tremendously useful in so many other fields over the intervening centuries. And as the size of kingdoms and empires increased, the need to transmit records and ease the operation of trade drove further advances in tax and technology. One of the key elements which facilitated transmission of detailed information was the tally stick. It's a notched piece of wood or bone that was then split lengthways so that each party had a matching record of the value that was stored up. And in time, that system, developed for tax, was so trusted that the tallies themselves would be accepted as currency in commercial transactions. As the rate of technological change accelerated, so the ways that tax was administered accelerated. With the advent of paper, we moved on to new technologies. We have stamp duties, stamp taxes, and with that, of course, the need to develop stamps that are proof against forgery. And as the recording mechanisms changed, so did the compliance machinery. We had comptometers, the mechanical counting machines, which predated electronic desk calculators, and then we moved on through individual calculators, desktop computers, and now laptops and smartphones. And all used not just for the tax compliance, but now for more basic record keeping too. Now, all the while, of course, the systems themselves are still working on paper technology-based mechanisms. But of course, we're now working with digital records that are held in computers. And these are infinitely reproducible. Multiple actors can access a single centrally held record. And when it's updated for one user, it's updated for all of them. thousands of lines of information can be shared at the push of a button, while the same data can be interrogated automatically by software in a tiny fraction of the time it would take to review and analyze the physical records. But if we move on to the next slide, what can we actually use this technology for tax for now? There's various ways it can have an impact. And if we consider some of the different types of taxes, then the benefits are going to vary. So for example, for profits taxes, the benefits of automation are going to accrue around calculation and analysis. But as long as these profits are assessed on an aggregate of transactions over a period of time and then require taxpayer input to adjust them for the tax law, then our existing underlying model of the taxpayer collating the relevant entries, analyzing and adjusting, and then transmitting to the tax authority is going to survive. I mean, there are technological benefits we can get. By setting out the format of the submissions, the tax body can put itself in a position where the bulk data can be collected and analysed, and they can use those results to profile returns into high or low risk for inquiry. Looking at different types of taxes, for transaction-based taxes such as VAT and GSTs, the impact can be far more fundamental. Several jurisdictions now require the use of fiscal tills for their sales taxes, and with advances in technology, these can transmit digital records to the authorities. Where the infrastructure is available, these submissions can be in real time, and several theoretical models have been developed to build on the real-time submission of information to reduce the scope for fraud and error. And of course, the ultimate extension of these payment mechanisms will see the sales tax element of a payment on a given transaction transmitted directly to the tax authority's account, never even touching the merchant's hands. Moving on again to the next slide, what can we see as the implications for taxpayers and by extension their advisors of some of these changes? Well, of course, the obvious one for the taxpayer experience is online filing. Online submission of taxpayer returns is well established around the world, and systems are more or less advanced into certain jurisdictions, but most countries now have the capacity, if not an outright requirement, for some returns to be filed online. Corporation taxes are a common candidate for online filing, while for many individual taxpayers, the adoption of technological solutions for other everyday tasks makes their availability for tax filings a viable option. But that builds into the actual underlying recording of the data. Sometimes it's mandated. There are tax systems now which absolutely require records to be kept in a certain format. But this has knock-on implications for businesses. For many smaller businesses, keeping digital records is something they wouldn't consider unless there was a requirement to do so for tax. But in many jurisdictions, the tax authority seems quite clear that actually it's this which is the real benefit for business, that they will have a complete, accurate, and easily usable set of business records. And there's a third aspect that we'll see change as these new technologies come through, and that's communication channels. We're all familiar enough with the idea of email as a method of electronic communication, but increasingly queries are being dealt with through web chats, through SMS text messages, and even where you have advanced taxpayer software through the APIs, the actual programming interfaces. So for example, some software is built with what they call nudge technology. It will pick up triggers from the transactions which are recorded and sometimes the treatment of those transactions, and in turn suggest to the taxpayer an alternative treatment that they might consider. Typically, of course, because there's concern that tax has been underdeclared or that something has been miscategorized. But this has significant implications for tax compliance, for accuracy, all sorts of potential benefits through communicating automatically, but through the software. However, a lot of this looks like, quite radical change. And if we move on to the next slide now, we just have a little bit of a think about change and perhaps take a historical perspective. We've had huge technological changes before. And I'd like to give an illustration here of one from a physical technological change. If we take the example of early factories, this is something explored in a little more detail in the report itself that Hassan mentioned. Now, these were designed around the power source, and initially the power was generated by water wheels or large steam engines. And that would then be transmitted throughout the factory via drive belts running from a single line shaft, which ran the whole length of the building. Now, those early factories, for all the fact that they were a massive leap ahead on the preceding technology for manufacturing goods, were noisy, dark, and dangerous places, and they were very limited in their adaptability. Now, towards the end of the 19th century, electricity became viable as a means of powering machinery. Initially, the factory owners simply replaced the existing steam power sources with electrical motors of similar size and power, powered by local generators. But before long, it became clear that electric motors are scalable in a way that steam simply isn't. And the design of the factories themselves changed beyond all recognition. Workstations could be shifted around at will, and more importantly, the space overhead was cleared of dangerous machinery, and that could be used for overhead electrical lighting. Now, of course, there was a parallel revolution going on in distribution of that electric power itself, with publicly accessible supplies superseding the corporation's in-house generators, so they now bought their electricity in from a separate electric company. But of course, what that meant was that the solutions that the factory's customers were after were changing too. As the same technology that allowed the factory owners to light their factories electrically started to permeate public places and domestic dwellings, consumer demand changed. And gas lamp makers, for example, soon found any improvements in efficiency were offset by falling demand for their product. The manufacturing business didn't exist in a vacuum, and neither did tax services. Now, one big difference between the transformation of the physical economy and the changes that digitalization is bringing to tax is timescale. It actually took decades for electric light to start to displace the earlier technology to any significant extent. If we move on to the next slide, there's a quote which I absolutely love, which illustrates this. Just a street or two down from ACCA's London headquarters is the Savoy Theatre. It was the first public building in the world to be lit entirely by electric lights in 1881, over 130 years ago. And yet, just a couple of streets away, Covent Garden is still lit by gas lamps. There's over 1,500 still working all the way across central London. But with the tax technology, we can't expect anything like the same gradual approach to the adoption of digital tools for tax. These systems are centrally run and they're imposed upon us by the authorities, and the authorities can see all too clearly the advantages to them of the features we discussed earlier. And I just want to turn quickly to a few real-world examples. So the first one is America. I've just thrown three figures up on the slide here for this particular illustration. 10,345 is the number of land parcels that property tax assessors in one county of Maryland were able to review using a program of aerial imagery and property tax data. That was more than twice as many land parcels as they'd been able to review in the previous year, and extended the county's tax base by $32 million. The second number, the largest number, the 1.4 billion, is what the state assessors reckoned they could uplift the tax base of the state by if they had deployed this same technology across the whole state. If we move to a second example, this one is not just a county or a state, it's a whole country. Rwanda, again, three numbers that I picked out. This is talking about a program that the Rwandan government started in 2013, which was the rollout of electronic billing machines. These are some of the fiscal tills that I mentioned earlier on. And it was to counter a range of problems they'd identified in the domestic VAT system. They set in place a new legal framework. Traders are required to buy and use these EBMs, electronic billing machines, and there was phased implementation, various different various measures to both ensure compliance, encouragement and enforcement there. And by 2015, the first figure comes into play. Rwanda's VAT collection rates were increasing by 20% a year within just 2 years. By April 2018, the tax authority estimated that the EBMs had cut the VAT compliance burden from 45 hours to just, you guessed it, 5 hours per year. And they started to implement plans to replace the physical hardware of the EBM with free government-issued software-based equivalent. And this was geared up not just to work on computers, but on smartphones. So turning to the final number there, 29 was the position that Rwanda was ranked in the World Bank Doing Business Index report for 2019. Rwanda, with its electronic billing machines, was the only low-income economy in the top 50 of the World Bank Index for the year. So turning to my third and final example, I want to look at Afghanistan. The first number here, 30%, is how much of Afghanistan's tax revenues were estimated to be collected in the form of customs duties. And that's actually quite a significant reliance on customs duties compared with the blend in most jurisdictions. What makes it even more significant is that the people who came up with that estimate also estimated that around half of all the customs duties that should have been collected, or certainly that were being collected from traders, were never making it to the government. So clearly, if they could do something about that, there were huge gains to be made. Now, as part of the US-led program to develop the Afghan economy, a US business was contracted to implement an e-payment system for payment of customs duties. They settled on a process, a system that they'd used successfully in other countries, so it was proven, tried and tested technology. And they rolled out the appropriate hardware to over 90% of the collection locations within the expected time frame. And they had this target, which was 75% of custom duties to be paid electronically. Well, that's the second figure on the slide. The third figure on the slide is where they were after 3 years. Just 0.74% of customs duties were being paid through this system, despite the fact that it had been successfully rolled out elsewhere. Now, among the issues that were highlighted in the US Special Inspector General for Afghan Reconstruction's report, it was the lack of infrastructure to support the full chain of payments that was the key factor in discouraging traders from using the system. Commercial banks couldn't access the central bank's electronic customs clearance system, which forced them to scan and transmit the supporting paperwork manually before payments could clear. So with absolutely no positive incentive to switch away from existing practices, the vested interests of those who could benefit from them still stayed in control. Now, until the surrounding legal and commercial infrastructure moved on, the technology for the customs payments sat basically unused. But as those solutions started to come online, as the banking system changed, so in that World Bank 2019 Doing Business survey, Afghanistan was the single top improver based on this and other wider enhancements to the legal framework for business. But that just highlights, coming back to Mr. Gibson's quote on the next slide, having tax tools is not the same thing as using them. The adoption of technology, even where it's available, varies widely both between and within countries. The range of individual experience and capability is probably the most diverse it's ever been. In a typical economy, those born in the 1950s and 60s will have spent most of their lives, certainly their formative years, in environments based purely on paper bureaucracy. Those born in the 1980s and 90s will have grown up in environments increasingly dominated by digital technologies. But some of them may not have had much experience of computers. For the world population under 20 years of age, computers have always been there. Now, the particular characteristics of digital tools also raise novel issues for business in implementation. Historically, any new technological advance has been physical, And that's then had the implications for economies of scale and fixed costs of infrastructure. But for digital, the costs of scaling are far, far lower. SMEs have access to tools that they could never have dreamed of before. And if anything, there's a case to be made that these technological solutions actually benefit small and medium-sized enterprises. They not only have the agility to try things quickly, but if it goes wrong, they can undo it. With the biggest businesses, once they've committed to a change, sometimes the cost of stopping that or reversing it may be even greater than the cost of having the program fail. Now, why is that important for policymakers in the tax world? Well, because so many programs of tax automation and digitalization are based upon evidence or even anecdote that the population at large use technology. Now, in practice, if business doesn't have integrated systems, there's going to be limits to the efficiencies a tax administration can exploit. For policymakers, there's naturally a temptation to mandate the use of technology and force through the changes, but there's a risk that that could do more harm than good. We've already seen tax administrations don't exist in a vacuum, and the tools themselves are evolving. Business is going to adapt to and adopt the best available technology. That's a natural function of competition, and that's always changing. But tax legislation and its enabling administrative tools exists as a unique fixed structure. Any change to that is a wholesale restatement of the environment for all taxpayers. They don't have the luxury of constant evolution. A change to the tax system, the administration, is significant and major. So to sum up, moving on to the final slide now, the linkage between business and economic activities, the shape of the tax system, and the capacity and priorities of the society within which they both sit is so intimate that a significant change in one will inevitably affect the others. Technology is driving huge changes in the means and mechanisms of production, and those same advances are affording consumers the opportunity of enjoying existing products and services in new ways, or exploring entirely new options. And of course, in the last few months, there's been a tremendous amount of discussion about the need to reframe tax systems post-COVID. But the existing pressures of demographic shift, of climate change, and the digitalizing economy haven't gone away. Governments may need to look at entirely new taxes, and with that should be open to exploring the best fit with local conditions, allowing them to balance the costs of implementation with returns from it. And businesses and advisors, meanwhile, need to ensure that they have the resources to adapt. And paradoxically, the most important area of investment in technology is the people who use it. The new tools and new environment will call for new skills and new attitudes which fit into the bigger picture of the evolving society. And that's where tax administration fits into the bigger picture. And that's what we should have in mind when we're developing these systems. Thank you everybody for your time and allowing me to share those thoughts. And I look forward to questions in due course. Thank you.
Thank you so much, Jason. Lovely, wonderful insight, I must say. And I think the times couldn't be more interesting for us in Pakistan as well, because we all know the government for quite some time is doing, utmost efforts to use technology and ensure there is good tax collection and there is good tax administration. And as we've seen in the examples shared by Jason, definitely there is a lot of benefit that we can derive from these technological tools. But obviously the society and the wider business environment and the infrastructure, all these needs to fall in place and be docked in with each other before these technological solutions can be really helpful. Now, I must request everyone to please start writing down their questions into the question panel, and we will take them in the end. Now, without any further ado, I would now like to hand over to our another very important guest speaker, who is an honorary secretary of ICMA Pakistan and chief executive officer at Shehzad Malik, Management Consultant. I'm proud to have Shehzad Ahmed Malik, who is also a fellow member of Cost and Management Accountants of Pakistan. Sir, if I may request you to unmute yourself and then let me make you a presenter as well, so that you may be able to share your screen as well. So I have now made you the presenter. If you could share the presentation with the audience. Javeri, I hope I am audible, and yep, here we are. So
Thank you very much. Can you hear me?
yes, loud and clear, sir. You can switch on the presentation mode and people will be able to see the screen.
Yes,
Thank you.
I have done. And my screen is before you or not?
Yes, yes, it's visible. Just switch on the presentation mode. Thank you.
Thank you. Yeah, that's okay.
Yes, that's perfect.
Thank you very much. And Assalamu alaikum and very good evening, members of ICMA Pakistan, members of ACCA, and participants to our webinar, Management of ACCA, National Council ICMA Pakistan, distinguished speakers, Mr. Jason Pepper, and very good evening. And thank you for inviting me for this a very important and valuable topic, and especially in this era of technology. And now I would like to discuss about that our today's topic, technology tools and the future tax administration. As you know, technology is changing our world faster than ever before. Digital transformation, excuse me, digital transformation is crucial to the sustainable resilience of organization in order to meet the changing business and market demands. This evolution requires a mindset for organization, employees, and members, as well as an organizational culture change before uh, deciding what digital tool to use and how to use them. Just a minute, there is some issue. Yeah, ये देखिए Mhm. ये remove कर दूं. This one appearing before my presentation. इसको यहाँ से delete हो जाए. क्या लिखा है? Sorry. This process requires the organization to envision its future and use that future to drive technology, not the other way around. This transformation requires continuous improvement. As transmission of the information moved from physical paper to digital formats, communicated through desktop computers, and now laptop and increasingly smartphones, the reliance on linear centralized paper technology based methods and processes has remained, and with it some of the flexibility for which it allows. One crucial point about digital records from an administrative perspective is that they are infinitely reproducible. Thousands of lines of information can be shared at the push of a button, while the same data can be interrogated automatically by software in a tiny fraction of the time would take to review and analyze the physical records. Type of administration in taxation: administration by department. Here in Pakistan is the Federal Board of Revenue, by consultants, by clients. By digitization, use of technology, sorry, tools and programming, many things are fixed. Just like in blockchain, data cannot be changed but can be rectified or adjusted if required. Huge data availability is not possible to dig out humanly. We need technology tools, and with the help of AI, artificial intelligence, we can identify and analyze the suspicious transactions. Technology trends includes big data, analytics, artificial intelligence, machine learning, the Internet of Things, IoT, mobility, and cloud computing are all having a huge impact on tax administrations. Taken individually or together, these trends have the power to increase taxpayer satisfaction, empower tax agency employees, optimize operations, and modernize services. This is where digital transformation comes in, with cloud computing services and adoption becoming increasingly mature. Many different entities of all shapes and sizes are turning to the cloud as a core engine of the infrastructure. However, this process within the public sector is slow. Use of technology by tax administration. With technology tools and digital transformation, they can turn data into a business assets using predictive modeling and the analysis of macroeconomic trends and policy changes that help develop workforce capabilities. With this, they can simplify compliance level and can help to prevent tax errors and fraud to a very minimum level. It can improve taxpayer services by facilitating payment methods, issuing faster refunds, and giving easier access to relevant information. Because especially from the last 2 decades, Europe and other developed countries are using this technology, and they are now they have been matured in these fields. But in our region, we are still in the initial phase. So we are facing more problems, and we have many door opens in this era. How this technology can benefit to administration? It can reduce operation times, decrease cost in some cases, improve risk management techniques, audit efficiency can be increased, and better incentivize international priorities. Technology tools and transformation can help tax administration with the following additional primary areas. It can increase transparency of strategy, processes, investment through extremely structured and or visually supported data, increase taxpayer satisfaction and voluntary compliance, which are very much in common nowadays. Initiatives such as country by country reporting and BEPS enhance collaboration and exchange of information between two administrations locally and internationally, which is also nowadays increasing day by day. This opens the door to enhance data analytics and governance. More than 32 tax administrations worldwide have changed their strategies from the traditional data-oriented audit to a risk-based, cooperative compliance approach that heavily relies on analytical during assessment processes. Tax administration and taxpayers expect the same easy access and real-time sharing of tax information that they get with other data holders such as banks and consumer-facing businesses. Such capabilities increase the connection and collaboration amongst tax administration and taxpayer, either it's a businesses and or the individuals. It also helps tax administration to securely exchange relevant data with banks, employers, stock exchange committees, chamber of commerce, and many more. Sorry. A new trend with the finance industry is tax administration automatically exchanging taxpayer information across jurisdictions. Taxpayers want assurances about their personal information receives the right level of privacy, security, and protection, expect to receive personalized, real-time, reliable services. This helps to maintain compliance, empowers tax policy makers to make decisions that drive growth and improve their public image by enhancing transparency and accountability. Most capacity building efforts focus on tax laws, just like double tax treaties, protecting and broadening the tax base, transfer pricing, and other technical tax issues. And the most important thing where normally underdeveloped countries facing is the budgetary constraints, and especially the public sector. Budget constraints and a lack of proper resources often pressure tax administration to do more with less. As administration continue to accumulate increasing volume of taxpayer data, they will want to convert that information into actionable insight that helps them increase revenue, retain their country's investment, attractiveness, and ease of their tax compliance burden. In lieu of recent financial leaks globally, they also need to take actions in relation to money laundering, tax avoidance, and tax avoidance. They will need to invest in technology to properly manage data growth. This includes attracting and recruiting people with the right set of skills: data analytics, data mining, forensic auditing, risk management, and technology to be able to generate actionable insight. In developing economies, there's a growing need to include more taxpayers within the formal economy through registrations, reduce tax evasion, and contract money laundering. As the tax administration agenda becomes more comprehensive, so too does the need to invest in technology to properly and securely manage the growth of taxpayer data. Challenges and technology limitations, especially in our region and even of the other part of the world, there is a huge volume of cash economy. Cash economy and undocumented cannot be tapped unless paper money is converted into electronic money. Like China and Europe, they are moving toward this revolution. Challenge is cryptocurrencies. They are facing, without banking of central bank, only the online transactions, and without any information of any client. It should be owned by a country like China. They have introduced their own cryptocurrency. Even tax collector is not ready for all these challenges. We can also discuss about a little bit about dark web. Is an internet of underworld having its own browsers and world and cannot be tapped easily. In our country, much more has been done with the technology, sales tax system, or the VAT, or either general sales tax system, input and output mechanism. Costing is also as like artificial intelligence. Standards can be set out and results can be achieved through their standards and their results and their analysis. Transfer of property and vehicles and deduction of tax in our country and many other countries is another information from the third party. Bank tax deduction on all transactions is also the one way how to tap the transactions and income of different who are not registered with the tax department. Money changers and jewelers and having costly items like diamonds, how they can be used with technology is also the challenge for the world. And something I should like to discuss about the steps taken by our country and our department, which is Federal Board of Revenue. Use of technology steps taken by FBR. The tax administration in Pakistan has also taken several initiatives from the automation of the tax system and procedures since 1996. Before that, they were totally relying on manual system. And now they have improved it to the next level, and which is the last 2 years, they are introducing POS system, point of sale system, where the cameras and other technology will be used to tap the sales, receipts, manufacturing, and all other business centers. There they have to register them, and they have asked them to use the POS, and its deadline is also given in our law, which is now make as a part of a law in the last budget. Similarly, online audits, online appeals, this is also included in the law. Access to bank transactions by big data, and AI will analyze the change in bank transactions with profits and sales declared comparison. FBR has also signed an MOU with our NADRA department for real-time verification of national identity card and associated details. It will help them a lot if they know how to use it. It will FBR service delivery standards for taxpayer and automate tax refunds, pre-fill data in withholding statement and tax returns. It will promote ease of doing businesses by saving time spent in regulatory compliance. It will facilitate onward linking of FBR system with other organizations. Huge potential for the identification of persons who are either outside the tax net or conceal their income and declaration of assets. Pakistan home to home than 64 million internet users and 62 million people connected to mobile data is no exception, as they have become more digital savvy. Pakistanis are now expecting better digital services from the government. Reducing the difficulties faced by SME sector in exporting their goods and ease of doing businesses, government, ministry and FBR has taken many initiatives and steps. FBR e-commerce automated clearance facility for custom wings in collaboration with the State Bank of Pakistan and Ministry of Commerce and e-commerce operators. The new system will facilitate e-commerce trade and document the e-commerce export from Pakistan. The system allows commercial banks to register e-commerce traders in VBOX system of Pakistan Customs. FBR has launched the Malumat Tax Ray app to facilitate the taxpayer and the general public. This application has been uploaded and the information of general public is given there, their detail of assets, their tax deduction, etc. With the help of this, everybody, every taxpayer, every assessee can file their annual returns correctly and fairly. FBR has introduced online faster system so that refunds claims can be processed without any involvement of tax officials, which is the demand of business community from the last many years. Mobile app to enable a sales tax refund claimant to view the status of refunds claim at each stage of processing has been made part of Faster Plus system. FBR, as I have already discussed, online appeals has also been introduced on web portal and facilitate the Commissioner Inland Revenue appeals to efficiently dispose the appeals using this portal. It will to minimize the physical contact with the taxpayer. With the use of this technology facilities, the filing of an appeal, reduce the cost of filing appeal, and will ensure efficient services delivery with transparency. FBR has targeted to deploy around 8,500 electronic devices like POS at retail outlet by December 2020 to bring the vendors into taxpayer net and document financial transactions and the economy. Other measures for increasing automation in tax administration in Pakistan, there is a long list. I will just write down 2, 3. Online registration, online modification, online return filing, active taxpayer list, sale tax refunds, applications of appeals, etc., etc. So there is a long list of the use of this technology, and online is available to our public, to our taxpayers. And the basic objective naturally is to minimize the physical contact between tax collector and taxpayer, to explore the non-taxable areas, to meet the tax gap remain a big problem for many countries. FBR is using technology tools to bring those individuals and organizations into TaxNet with the either paying no taxes at all or paying fewer taxes against their earnings or income. According to statement by the IMF resident representative in Pakistan, the tax collection by FBR is 62% below its potential. But this level of collection is equivalent as compared to peer regional economies. Around 50% of the revenue are collected by FBR at the import stage, including CD, custom duties, withholding taxes, GST, additional custom duties, and regulatory duty. Real-time access, which was introduced in the last budget, that is my second or third last slide. Just want to close with our last changing in our budget approved by the National Assembly. Real-time access to NADRA and immigration databases to increase tax base and reduce tax evasions. It was proposed and then finalized FBR to make arrangements to have real-time access to information and database of following four for sales tax and FED federal excise duty purposes: NADRA, FIA, Bureau of Immigration and Overseas Employment, ICT, and provincial and local record and development authority. These all will be linked and their access will be given to FBR, Federal Board of Revenue. And with this, they can, get any data of any taxpayer. Is the exact information. Islamabad Capital Territory and Provincial Excise and Taxation Department, even all electricity suppliers and gas transmission and distribution companies, any other agency, authority, institution, or organization notified by FBR. Only one relaxation has been given in the final law. That is, these information is restricted, both FIA immigration agencies, to only international travel, not to those who are working there and are holding Ikama and other resident visas. That's all from my side. And I must say that this is technology is moving day by day with the so much speedily that it is not easy in our region to cope with this speed. And this huge data, to administer this huge data, there are so many challenges are also we have to face and we have to encounter. So
Thank you.
our tax administration, just a last line, our tax administration must be ready for this, and they plan for the next 20 or 30 years. Thank you very much. Thank you all.
Thank you so much, Shahzad Sab. Wonderfully explained, described in the local context, and as we all know, and shared by Shahzad Sab as well, that a lot of effort is being done in the local context as well, where different institutions, and especially the FBR, is really using the technology infrastructure. It's just completely understandable. It is an uphill task, obviously. It, this means a lot of change. This means going through a lot of different behaviors across all stakeholder groups. But definitely, as we have seen from the report, that once deployed effectively and once making sure that everything is falling into place, it has huge dividends for our society as a whole. If as a country we are able to manage the administration of tax collection as efficiently as possible. Now, we already have overrun some of the time, but I hope that was worth it, because you guys would have the chance to listen to the very two prominent speakers, one the report author and the other someone who is involved into the local tax sector day-to-day basis. Now I move on to your questions. Now it's time we answer your questions that we have received so far. So I would also request, when you write your question, please mention who you would like to answer this, have answers from. So if I may request on the first question from Mr. Mubashir Bashir, and that was sent immediately after Jason finished his presentation, and if I could refer this to Jason. So Jason, the question we have is, what is the progress on cross-border digital transactions where payment gateway or server is in USA, shipment is from China, and customer is in Germany? I hope you would be able to understand the question.
Ooh, there's quite a lot to unpack there. I think, and it's probably not one that I can specifically answer for that sort of triangular setup. We don't yet have a unified regime for what happens when things are ordered in one country, delivered somewhere else, and so on. There is some progress through the BEPS and the Pillar 1 and Pillar 2 developments with the OECD. Again, of course, there's the concern that if we don't get a solution from them, we will end up with a series of unilateral arrangements, which is why even if I had an answer for sort of the China, US, Germany triangle, it wouldn't necessarily work for any other triangle on the planet. But it does highlight some of the difficulties that we're going to have to deal with. And these get even worse if you start to introduce technologies like 3D printing, where, for example, instead of ordering physical goods which move around, you order effectively use of software which will print components or goods in a separate territory. Where does the value arise if you're looking at a VAT, at a sales tax? So there's an awful lot to unpack in that situation. And if you're looking at trying to tax the profits on it, I've had a number of people suggest that actually profits in these online digital transactions that are going across international borders are just too hard now to try and analyze. We're moving into a world where they look at simply local consumption tax wherever the consumer is for any given digital transaction. That's where they'll put the tax in. So where it originated from and where it was ordered from, it may even fall out of the equation completely. So sorry, it's a bit of a non-answer for the question, I'm afraid, but it does raise all sorts of other questions, and it just highlights the difficulty that we've got. We're trying to build tools to accommodate these new developments.
All right, thank you very much, Jason. I hope Mr. Mubashir was able to understand and really reflect on what you have just responded to. Another question, I would like to hear your opinion on overtaxing a particular sector of economy in hopes of raising greater tax revenues. Uh, for example, you mentioned the custom revenue collected in Afghanistan. Similarly, we have significant withholding income tax in Pakistan. How do such policies affect national economies in the longer run? I must say, a very important, pertinent question. So over to you, Jason, for the response.
Thanks. Yeah, the unintended consequences of raising or lowering or enforcing a particular tax is something that policymakers and the administrators need to be completely alert to and ready to deal with. We can never quite be sure 100% what the response is going to be to any change in tax policy. And also you have to look at it in the wider context. So if you're looking at a withholding tax, are there alternatives that people could undertake that might bear less tax? If so, they will maybe look that way. Are there other ways around a tax? Because we know that for every action there is an equal and opposite reaction, and tax is one of those. For all the fact that we try to implement tax policies that don't distort behavior, inevitably they always will. So yeah, there will of course be long-term implications of implementing digital tax, even if it is actually to drive people away from adopting whatever technology is used to implement the tax. If it's sufficiently disruptive, causes enough difficulty for taxpayers, then they may simply turn away altogether from the other potential advantages. So yeah, there is a lot to think about when trying to implement digital taxes, and in the long term, although they're here to stay, they almost certainly won't be in the shape they are now because of those behavioral effects.
Thank you, Jason. Another question referred to yourself by Mubashir Bashir again was how to establish tax incident and when. Now, I hope you would be able to have understanding around the question. So that's the only thing I can read. How to establish tax incident and when. Does that make sense?
Oh, yes, it does. And tax incidence is a huge area of debate. And this comes up particularly when I say we're looking at the interaction of tax and business and society. Who actually pays the tax? I've already alluded to the difficulties of taxing profits in corporations. And incidence of tax is talking about who actually suffers the burden. And very often the person who suffers isn't the person who's supposedly paying the tax, because a business, if you put an extra 2% tax on it, if they can push their prices up 2%, it's not the business that's paying the tax, it's the consumer who's having to give the cash to the business, who gives it straight to the tax authority and stays where they were. In terms of the business's own results, they're not bearing any burden of the taxation. Now, for digital taxes themselves, it's almost an economics question. It depends how mature the market is, what flexibility there is to pass that on. There's been tremendous debate in the UK and elsewhere in Europe about taxing Amazon, which has a huge market dominant position in terms of online deliveries. What happens if we try to tax them? And there was a big debate as to whether Amazon would pay the tax or would they pass it on to the customer. They have said that they will pass it on to the customer, but there is an awful lot of concern that actually for some of their smaller businesses who trade through the Amazon platform, their margins are so tight, they have to pass it on. They may not be in a position to if there's competition there. For the monopoly supplier, of course, they can pass it on. If you've got 6 businesses all competing fiercely on price and you start to tax digital activities, they will have to bear that themselves, because if anyone tries to pass it on to the consumer, they will lose business straight away. Unfortunately, it's one of these things where it's very difficult to get accurate information to actually model. It's something governments should be hugely interested in, especially given the ability of business to move around the world using the same digital tools that we're using for the tax. If you can operate in any country in the world and you can find one where you don't have to bear the tax, then for some businesses, that's where they will move to.
All right, thank you so much for this comprehensive answer. Now I have a question from Mr. Abbas Khan directed to Mr. Shehzad Ahmed Malik. So the question is, why are we having multiple sources of data like NADRA, FBR, provincial revenue authorities, custom authorities, and so instead of one body or one UAN tax number and revenues can be distributed? So I think a very pertinent question from Mr. Abbas Khan. I would request Mr. Shehzad to respond to that.
Thank you, Mr. Baz. As you know, in our country, there is a very undocumented economy is also prevailing, and we can say another economy is working parallel. and that's why cash and undocumented economy requires some information from the third parties. And with these, we have to make different laws and to get information either from the bank, either from your NADA department, either from FIA, and either from immigration department. I mean to say, we can tap how many visits to outside Pakistan, and go, and a person taxpayer is, or either the person who is not filing his return, but he has visited outside Pakistan in every after a couple of months, then what should be the source of income? And similarly, if he has the bank transaction and he is doing bank transaction in a millions, but he is not paying tax according to and showing his income in the tax returns. And the thirdly, and if he has the properties and he has not declared in his wealth statement or either tax return, then your ICT department, your other RDA or either LDA and other departments can give the information to tax authorities. So that's why with the passage of time, when FBR department and ministry can see that economy is working and the but the declaration is not at the required level, as IMF representative also said that we are collecting tax almost 62% of the total potential. So that's why we have to see other department also. Previously, FBR and State Bank was not ready to give any information, but now in the last year, either FATF and Anti Money Laundering Act, now they are ready to give information. And in this way, I must say, as a also the tax professional and advisor, that now our taxpayers and our citizens should be very vigilant, and they should declare their information fairly and correctly. Thank you very much.
Thank you very much, Mr. Shahzad, for this comprehensive response. Now, another and last question, and then we will move on to the vote of thanks, as we are already 12 minutes overrunning this session. Muhammad Yamin has a question, and I would like each of the speaker to quickly respond to that. So, Jason, if I could go first with you, in your opinion, what taxation system would be more good? A slab-wise taxation system or a flat taxation system where a flat rate is applied?
I would say it depends on what you're taxing and where. The benefits of flat rate are simplicity. Interestingly, that's actually something we no longer necessarily need in a fully digitally enabled environment, because of course any calculation can be carried out by the software for you. A slab rate or a progressive system often meets some of the requirements of the system far better. It depends whether you want to raise revenue, to redistribute wealth, or to regulate human behavior, change what people are doing. If it's the latter two, redistribution and regulation, then a slab system is the way to go. If you're simply raising revenue, then simple and non-distortionary, so I'd apply a flat rate system.
Thank you very much. Mr. Shahzad, if I may request you to respond to the same question.
Sure. Actually, what Mr. Jason said, I have the same opinion. Firstly, that it depends upon where it is we have to apply, and also the situation or the region, depending upon the region. That in our region, we can say people are reluctant to register with the departments, either due to the is the image of some of our departments, and they are fear of harassment and other things. That's why sometimes they don't want to register with the department. So in this case, if there is some fixed tax or either the flat tax, that can be more feasible. And similarly, if for the small businesses, and traders, there should be some flat tax, so they can pay, and a very easy return should be available, which our department is also doing, and we have in the different capacities and different platforms, either of the ICMA platform, either of the tax bar, or either of the Chamber of Commerce platform. We have suggested to FBR and our ministry that an easy return system and a flat for the small shopkeeper and traders should be introduced, so that they should just pay and know that that is my profit, that is my revenue, that is my turnover, and we have to pay annually just an one amount and flat amount. So they don't go for any audits, they don't want to go any for documentation and other things, because again, I would say, as per last my question, that due to undocumented economy and cash economy, we have to see that parallel, we have to sometime is the flat or fixed tax in some you're generous, and the community and the other big companies, corporations, and other big businesses, we have to go for normal returns, and then their audit and whole procedure of taxation should be introduced. Thank you.
Thank you very much. Thank you, Mr. Hasibullah, for the comments that you have made. Certainly, Bitcoin seems to be the future, but obviously, we all have to see how the space is going to evolve. Lastly, Hira Jalal has a quick question, and she says that please comment about the e-commerce tax for home-based businesses. I would request Jason if you could quickly respond the tech side on the e-commerce space.
Right, to unmute quickly. I think taxation of e-commerce, as I referred earlier to, sort of changing patterns of consumption and production. People are buying more, I think, from e-commerce than ever before, and some of that has been accelerated by COVID. It depends on whether you want to distort the market between conventional sales and e-commerce. If you want them to have the same opportunities and benefits, then you need to tax them the same. If you think that e-commerce has a particular advantage which should somehow be offset, then it's worthwhile putting in a tax regime for them. Whatever it is, of course, by definition, e-commerce is happening digitally. So using digital tools should fit better, and it should be possible to have at least a light touch administration. For the policy on rates and tax base, that's a completely different discussion, and one which goes beyond the technological tools themselves.
Thank you so much. Now, without any further ado, I would request the Executive Director of ICMA Pakistan, Mr. Amir Ejaz Khan, who kindly joined us during the session. May I request you, Amir Saab, to please share the vote of thanks and at the same time just reflect on the topic and the speaker that we had for the today's session. So over to you, Amir Saab. Thank you.
Yeah, thank you very much, Hassan. It's a really wonderful topic. What I already have in my repository about the taxation is that there are two certain things in life. One is debt and other is taxation. And the worst part with taxation is that you will be only dead once in life, but you always have to bear different wounds being given by the tax authorities. Every year, rather in Pakistan, we are being deprived every quarter or every moment, So thank you very much for our learned speakers. I'm really thankful to Mr. Jason, who already joined us from UK, and Mr. Malik, who enlightened us about his thoughts on the topic, and the platform, the joint collaboration of ACCA and ICMA Pakistan. Both organizations are there to help our members, the stakeholders at large, in order to enlighten them or apprise them about any activity being held in this arena of the digital world. So the digital world is being transferred in this taxation now. And there are a lot of things to be done, just like those e-commerce related issues. If the world is open, the global village, then how one should tackle all these complex questions with regards to taxation in this global world. So these questions are there with the evolution of free trade, with the evolution of GATE and WTO regime and everything. So off and on, people took these topics on a very serious basis, and they came up with certain solutions, just like finalizing certain regimes in between the countries and finalizing certain treaties among the nations. So now this is something going to be beyond that. And the global village is open for everyone to deal with every other entity. So now how can we consider all these things in this arena and in this new regime? This is a challenging question for all of us to ponder on. And we'll certainly having some other panelists in next times that who will be enlightening us or uprising their thoughts on these sort of issues. And I'm thankful to ACCA as well, who gave us this opportunity for having this consolidated effort from this platform. And I'm thankful to all the very vigilant participants of today's session as they stepped up with us. I have seen the number of participants have entered in 3 digits on this platform, and this will remain available to its recording on this media, and people may get benefit out of that later on as per their convenience. So once again, I'm thankful to ACCA, to ICMA Pakistan management, and to my learned speakers, Mr. Jason and Mr. Malik. Thank you very much. Over to you, Hassan.
Thank you so much, Amir Jas Khan Saab, always enlightening us in lighting and humorous way on the very delicate and important subjects like tax. Couldn't appreciate more your thought process, and you definitely said it right. We all also like to thank our audiences who've been remained very active. And few housekeeping and announcement before I say goodbye. Number one is that the attendance certificate, we could not issue and send the attendance certificate of the previous session. So we will be sending the attendance certificate of both these sessions in this week. Because of COVID-19 and the lockdown situation, we keep on switching from work from home to work from office. Therefore, that's why few operational challenges come on in the way. Another housekeeping announcement that all the attendees would be able to listen to the recording by accessing the same link. There will be 2 hours before the recording is finalized and uploaded onto the platform. After that, what you would be able to do is that just go to the same link as you have used for registering for the session, type in the information, and you will be directed to the recording directly. Alternatively, you can contact myself or Mr. Veria Malik in ICMA for any other support that you may would like that you would like to have in this regard. We will be coming with another session on a very high octane topic with high octane speakers in the next month. Stay tuned with us and keep sending your feedback to us as well, because we would also like to hear from you what you would want to have next. One last announcement, and just for the information of everyone on this call, today is the 116th birthday of ACCA. So 116 years ago on this day, ACCA started its journey, a long journey and a very prosperous one. And it would not have been possible without the partnerships like the one we are having with ICMA Pakistan. So we are very proud to have these national partnerships with different accounting bodies across the globe, and that really what makes the difference. And that's what really improves the profession for everyone across the globe. So take care of yourself. Speak soon. Thank you very much to all the learned speakers who have contributed great deal. Thank you, Jason. Thank you, Shahzad Ahmed Malik Saab, and thank you, Amir Ejaz Khan Saab. Have a wonderful rest of the day. Speak soon. Bye.
Thank you.